A big day on the economy front, particularly when it comes to interest rates. Let's bring in our regular Warren Hogan, economic advisor at Judo Bank. Warren, how likely is it that the RBA does hike rates today against the overall sentiment of your colleagues?
Yeah, good morning, Kieran. I think it's still a pretty low chance. The market's only ascribing a 5 to 10% chance, and I think there's only one forecaster who'll think they go. And given that this is a big sort of shift in the last month or so from a discussion about rate cuts to the potential for a rate hike, it just feels a little bit too sudden. But that being said, there is some history that every time inflation comes out at 1% in the quarter, they follow that with a rate hike. And of course, we just received a 1% increase in inflation in the March quarter. So I think that's keeping people on edge, but I think they'll stay on hold.
And I know it's a blunt instrument, and a lot of people are hurting right now. So that's the context in which we're having this discussion. However, the whole point of what the RBA is doing here is to shift behaviour. And in history, we've seen at times RBA surprising with decisions because of that very reason. They want to shift behaviour, Warren.
Yeah, certainly. And some of the most common months for them to move on rates is November, December, which is obviously also when a lot of people are out spending ahead of Christmas and so forth. So, look, this would be a real shock. And of course, it is based on a view that we still need a higher interest rate in order to be confident that inflation will come down to target. I think that there is a real chance that they need to go again and maybe a couple of times. And look, they may take the view that, look, they need to do it now. And if they do it now, that might be get the job done. The stitch in time saves nine. And it would certainly hit behaviours quite quickly, I think.
So is that the argument, potentially? Again, we say it's a slim one. The chance, as you articulately put it, the markets show it's 5%. So it's not a likely scenario. But if it were to happen, politically, if you look at it from the political prism, while the government might not like it, it might, in the end, benefit from having action sooner rather than, say, as you put it, 2 or 3 later in the piece.
Yeah, well, I mean, if I was the government and accepted that we may need to see higher rates, you'd want them done as soon as possible and keep them as far away from the next election as possible. And also, the sooner that the RBA gets on with hiking rates, if indeed that proves to be the right thing to do, the sooner they'll be cutting. So I think there's a strong argument, both from an economic and a political point of view, just to get it on with it. I think the case is there for one more hike. I don't think they'll do it today, and I think by the time we get down to August, September, the case might be for a couple more. But definitely, the sooner they go, I think the better it'll be for the government.
Warren, what do you make of the language from Jim Chalmers? We had him on the program yesterday. He had his news conference as well. He's warning against scorched earth austerity on the one side and a free-for-all spending spree on the other. What do you make of his language, where he's really pitching himself as taking the middle ground when it comes to his third budget?
Yeah, I mean, it's interesting, isn't it? Because the Treasurer has been quite active in the last few days, and I think that's because they've been caught by surprise by the sort of the shift in the narrative towards more rate hikes and this inflation being stickier. And I think they are going to be spending a bit next week. So he wants to try and frame that as responsible when some economists might question that. I don't think anyone's calling for scorched earth austerity. I think the main call from those economists like myself who are concerned about inflation is the government continues to show the disciplines they have in the last few years around new spending. So I do worry that this is a signal that there could be a bit of extra spending than people would like to see in the budget. And it certainly, I think, reflects a nervousness about how both today at the RBA's statement and press conference and, of course, the reaction to the budget will be perceived by economists and markets.
And just quickly before you go, we're almost out of time, but the states acting on their own in Queensland, Victoria today, putting money and subsidies out there in terms of energy rebates and school support for families in Victoria today, that's also feeding into the mix.
It certainly is. And the states have been a big player in supporting this economy and creating this pressure on the economy and this inflation pressure. So they're not going to get the political opprobrium of an overheating economy and rate hikes. So they sort of go about it, but it's the federal government that bears the brunt of the political fallout. So I think this is a dangerous situation for the
Yeah.
government and adds to the case for discipline next week.
Warren, look forward to seeing you on Budget Day. You'll be with us here in the Parliament for that. Catch you then.
Thanks, Kieran.